How did the auctions perform over the weekend?
Pretty well, Pete. According to CoreLogic, it was the highest clearance rate since pre-COVID. So highest clearance rate since early March of 72.4%. About 900 homes across the country were auctioned over the weekend, which is about 100 more than last week, but still down on the 2,000 homes sold about a year ago. So the market is still low, but it's getting better. Melbourne is still struggling. It had the lowest number of sales ever. It had 11 homes up for auction over the weekend, which is a record low. It did have a clearance rate of 76%, but it's obviously off a tiny base. The good news for Melbourne, though, is according to CoreLogic, next week there will be about 60 auctions across the Melbourne market next weekend. So the market is starting to pick up from next week, which is a good sign. Sydney is still performing strongly, about 700 auctions in Sydney over the weekend, clearance rate of 72.4%, which was the national average. And across the other capital cities, Canberra was particularly strong. 74 homes were up for auction, clearance rate of 89%.
Okay. All right. Now, meanwhile, Ed, the preliminary retail sales figures for August, they're going to be released on Wednesday. What are economists predicting on that front?
Look, economists predict that, unfortunately, during the month of August, that was when Melbourne was in its big stage 4 lockdown. They're saying that's going to have a bit of an impact on the numbers. They think retail sales could be down about 4% during the month of August, all due to Melbourne. Obviously, it stopped a lot of retail activity due to social distancing and store closures. But they've also said that the fall in sales would have been a lot more if it hadn't been from government payments, superannuation withdrawals and the rise in household savings ratio and potential tax cuts. So it's looking like a tough retail figure for August, but hopefully it picks up again in September.
And also on Wednesday, Ed, the Reserve Bank of New Zealand is holding its interest rates meeting. What do you think the chances are of negative interest rates in New Zealand?
Well, CBA economists say by early next year, we're very likely to see negative interest rates in New Zealand, which is pretty incredible. The Reserve Bank of New Zealand Governor Adrian Orr has spoken about it a few times throughout the year, entertaining the idea of negative interest rates. The cash rate in New Zealand is exactly the same as Australia right now. It's 0.25%, which is a record low. But the speculation is in early 2021, they will cut interest rates to -0.5%, so half a percentage point. So interesting, the Reserve Bank of New Zealand, they're interested in these unconventional policy measures, which is quite different to the Reserve Bank of Australia. Our Governor, Philip Lowe, he has ruled out interest rates. He said he's not interested in it at all. They prefer just normal policy measures of keeping the cash rate as it is, which is 0.25% in Australia. He said that's likely for about 3 years for the Australian economy.
All right, let's turn our attention to the stock market. What are you thinking today?
Looking like the market is going to fall about 0.6% today. At the end of last week, the Dow Jones fell and the Nasdaq fell. Investors continuing to sell off technology stocks. And it looks like our tech sector is going to fall again today. And that's going to drag the overall market down, Pete.
What's the reason for that sell-off, Ed?
The main reason is investors believe these shares have gone up in such a large amount of value since the 23rd of March when the market was at a record low. They've decided, we think we need to sell the shares now, bank our profits, because we think they may be potentially overvalued. They may be overvalued, so people are basically selling the shares to bank their profits now in the fear that these share prices will fall again.
So it's a correction of sorts.
Yeah, it's sort of like a correction, yeah, correct.
And is that the same for you? We've spoken about this so many times, the buy now, pay later stocks, Afterpay, of course, leading the way there. Do you think that will kind of trend negative as we move forward?
Look, it has trended downwards the last sort of month or so while this tech sell-off has been going on, because it is obviously one of the biggest technology stocks on the Australian market, so it always feels the pinch. If the tech sector falls today, we can expect Afterpay to fall as well. So I'd see the Afterpay share price going down a little bit over the course of this tech sell-off.
All right.